Hello and welcome. It is Friday, the 27th day of January 2017. Let's take a look at the silver chart, which ends the week with its fifth consecutive week with the closing price higher than its previous, or five up weeks in a row, as it closes in at 17.17 American, a little over 22 and a half Canadian. A little over 16 euros, and the gold to silver ratio down to about 69 and one third. And historically speaking, 22 situations in 25 or so years, it has had 5 weeks up in a row. The last time was 1, 2, 3, 4, 5, and then it ended in 6. It normally occurs after it's had runs higher like this, where it's from a not from a bottom. This is one of the rare times where it occurs on a bottomary period. So most of the previous losses it has encountered, which I'm going to talk about, and even big gains for that matter as well, occurred because the 5-week winning streak was already in a bull market. So here's the stats. Off of a 5-week winning streak, 11-11 record, 50-50, coin flip, all that type of jazz. Down 6.83%. And the average volatility is where the key lies here, because on those 22 weeks, over 8 2/3%, and over the last 25 years, the average week for silver is 5 1/3. There has been 4 consecutive weeks higher following 5 consecutive up weeks, and that means the last 4 times this situation of 5 weeks in a row was played, including the one that I showed, resulted in the next week following higher. So this 11-11 record used to be 7-11. It used to be down 20%, where it was down 7% now, and it used to be up 10% at one point as well in the 90s. I think it's also worth noting that when I look at this tells me 2 things. This one tells me that it's a lot more volatile today compared to back then, because this average of 3.32%, which is what this lies in, is for 91 to 95, and then well, since 97 in here. And the 5 volatile weeks, the first 5, the week after was only 3.89%, where the last 17 situations, silver's come off a 5-week winning streak, it's averaged 10% volatility. Which makes sense, because after these up weeks, you would have to think that there's a decent chance it could easily extend gains, as well as even sell off and bring the price lower. We can see in here the volatility. The high was 21 and change, and the low was 19 and change. That was close to 10% right there. So I would expect there's a good chance next week of decent volatility. Now, as far as analysis, we can see, as we're going to see more clearly on the daily chart, this resistance area field, which is a key level. Breaking this, we'd be looking at the next Fibonacci line close to 18, but more importantly, the next beating the first lower high, and then the next lower high is going to be in there. That's what the test is getting back all of those lower highs in a row. And the candle in itself is a bullish candle. To have 4 consecutive up weeks like this, notice that it's had a retracement this week, and it's already rebounded within today's session. So therefore, that's showing reason why I could very easily have one week where it maybe even comes up to this Fibonacci point. And when we're looking at corrections down here, I think the daily chart is going to be where I want to show it. But first, I want to show it with this trend line. Within this trend line, whenever you break it like this, as I was saying, it's possible to recapture, but you have to do it fast. So Thursday, it falls below. Friday, it gets back. So that's the next stage of capturing it fast. The next stage is on Monday, getting back within this range, if of course this trend is not over. when we see it further, is it going to correct a little bit through time? Just maybe. I think it's still going to be important. You can see this resistance very clearly here. A break of that significantly would have a move that would have, again, the 18 handle, and then breaking that would be up towards here. So a decent level. They could do all of it in one session for all we know. It's possible. It's done it before, having gains of 8-9% in a day before. It's rare, but it's possible. That's the best way to put it through. And it's a situation where it'd be least surprising for it to occur on Monday or even Tuesday for that matter. I was saying earlier on the Friday session that if any price action came down here, I would have probably would have seen a quick move down to here, but that never happened. So if you were looking to bet short on this situation, then it's good that you wait for that spot. So if it does something like this, it's not going to get you. Now, of course, because of this correctionary move, 3 red candles down, most of it back in one day, I'm going to have to see this as very strength on this correction. I'm still going to be just now putting this into neutral within this band until it breaks either way. Meaning, up above here, I'll be looking for that move, as I'm saying, with the 18 plus area. And then breaking down below this support, at least a fast move to this point. And I would expect that fast move to be anywhere between 10 minutes to an hour or so as the most logical time to get there. And then I don't know how this will play out as support, because it's like flipping a coin. If it's going to start to build that inverted head and shoulders pattern, or of course it's just going to keep going lower and then have this next test, and the test below this going lower is 15.22. Of course, upside 18, this high, and then you have these range of highs after that as your up and downside levels. And that will conclude this video. Take care.